Welcome, everybody. My name is Andrew Patricio, and over the last 20 or so years, I've been working with business owners, and I always say to them, one of the most important parts of our business is managing our cash flow. And today, what I'm going to share with you are some tips and advice on how do we manage our cash flow. Because I really want you to understand that cash flow is the key. If you've got money flowing through your business, the chances of succeeding are so much better. And we got to think about this. And I spend a lot of time with business owners because they don't always realize that even if you have a very, very profitable business, you can still have a cash flow. So let's go through what we're going to be discussing. I believe this 100%, that lack of cash flow is the main reason that small business owners fail. I really believe this, that cash flow is the main reason that small business owners fail. And we just got to be aware of this because these are some of the challenges we face. Actually, I saw some research recently that says 80% of small business owners will fail because of cash flow. And you've got to understand the importance of this. The second thing is that cash flow is your responsibility. It really is, and you've got to understand that this is your responsibility. You can't leave it to somebody else. So you've got to make sure that you understand this and you make it your problem. The third thing, which is really important that you understand this, is that you can have a very, very profitable business. So great profitable business that still has a major cash flow problem. So we've got to be aware of this. And I've seen this in many cases where you've got a business that is generating sales, they're making really good profits on their products or their services, but people don't pay them on time, and this could be a big issue. And this is something that you and I need to manage. We can't leave it to somebody else. It's something that becomes our responsibility. I don't know where I found the saying, but I think it is so appropriate, is that in business, sales is really good for your ego. And I say this to business owners regularly, that sales is vanity. You've got to be very, very careful of this. That getting impressed with the volumes of the sales that people do. Profit to me is one of the reasons we go into business. But cash flow is really key. And you've got to understand this, and I want you to memorize this, that sales is something that is good for the ego. Profit is something that's really good for you because you want to be making profit. But cash flowing through your business is how we survive. So really, we've got to spend a lot of our time on focusing on our cash flow. So let's go through some of the challenges that we have as a small business. And I find if you and I can identify what is causing our cash flow problem, we can address that. So the first thing, and it sounds very, very obvious, but you want to make sure that you are generating enough sales to at least cover your outflow. On a monthly basis, you've got to make sure you're getting this right. So are you generating enough sales for your outflow? And I'm going to show you how to calculate that a little bit later on. The second reason that small business owners have cash flow problems is that they just don't collect their money fast enough. And this is something you've got to be aware of. You've got to make sure you're on top of that. If people owe you money, you need to make sure you need to be communicating with them, and you need to make sure that you're getting your money on time. And I'm going to show you how to do that now. The third one is undercharging. And I find a lot of us do this. A lot of us undercharge for our products or services, and this is something you've got to be very, very careful of. Make sure that you charge a fair price for your products or services. The fourth thing is your expenses are too high. And I've learned a couple of really interesting lessons over the years. I find that often when the economy is not doing so well is when we really learn how to become great business owners. Because it forces us to go through every single expense and analyze it. And it's really key that you do this on a regular basis and understand that this is one of the challenges that small business owners go through. If this is one of the challenges, it's something that you and I need to address. The other thing is inventory. For me, inventory is an absolute pain in the neck. And the reason is because as a business owner, I've got to make sure that I have enough inventory in my business to keep my customers happy, but also I've got to be very, very careful of having too much inventory in my business. because if I have too much inventory, that'll create cash flow problems for me. So I've got to really manage that. And the last one is growing too fast. I'm very wary of growing my business too fast because I've realized that as my business grows, it needs money. And money is like oxygen to a business. And you've got to understand this, is you want to have good cash flowing through your business. It's like oxygen. It's very, very important that we have that in our business. So think about these things as a business owner. Are your sales high enough? Are you focusing enough on your sales and marketing? Are you collecting your money fast enough? Are you undercharging for your product or service? Are your expenses too high? Is your inventory being managed? And are you growing too fast? And these are some of the things we need to address. Obviously, growing too fast can be quite a challenge because sometimes you can't help yourself because the demand just keeps going up. But this makes it very, very challenging for you. Let's go through the process. So we've identified what creates cash flow problems for a small business owner. So these are the type of things we need to check. The first one are our accounts receivable. These are people that owe us money. And you're going to be very, very careful of this, especially if you sell to large clients. I find that this happens on a regular basis. First of all, they'll only buy from you if you give them terms. So that's one of the first challenges. But the second thing is that often they'll pay you late. And often they don't have really good, valid reasons to pay you late, but they will pay you late. So just be very, very careful. Just be very, very careful of this and understand the impact this will have on your cash flow. So some of the things you need to understand and you need to look at is, are your clients paying on time? And I'll give you a very good example. I remember a small business owner one day coming to me, and she said to me, Andrew, I've got a problem. I need to get a business loan because I'm running out of cash. Anyway, so I went and visited a business, and I said to her, tell me a little bit about your business. First of all, I said, what are your terms? So when customers buy from you, you invoice them. How many days does it take to pay? And they said, well, our customers pay us 30 days. That's the terms we give our customers. So I said to her, if your customers take 30 days to pay, and you do $100,000 of revenue a month, say, your receivables, the maximum your receivables should be is $100,000. Anyway, so we went through her receivables, and I realized very, very quickly that her receivables were not $100,000. On average, they were $150,000. So that was a problem. The problem wasn't that she needed more money for her business. The problem was that she wasn't collecting money fast enough. And you're going to be very, very careful of this, is that if you allow people to take an extra couple of days here and there, they will. And this ties up your cash flow. You cannot afford to have your cash flow tied up. So just be very, very careful of this. Just be very, very careful of this, is that you are giving customers 30 days, but they are taking more days. So one of the options for you is to reduce your terms. So you can do that. You can reduce the terms you offer to your customers. Again, this is a decision you need to make as a business owner. Is this something worth pursuing? Should I be reducing the terms I offer my customers? And for some of you, you have no option. For some of you, you have no option, and this is the solution for you. So think about this. Is this an option for you to go out there and actually reduce your terms? So maybe this could be a strategy you go through and say to your customers, we've always been giving you 45 days or 60 days. Now we have to reduce our terms to 30 days. And every one of you have been exposed to this before. When you're buying from a large company, sometimes they make a decision like that. The other one is your inventory. Now, this is something that really concerns me. And the reason is because I was a retailer for 11 years, and this was a really, really big issue for me, because I realized when we didn't manage our inventory properly, what would happen is it would create problems for our business, because we'd have too much inventory in our storage areas, and to me, this was money lying around. So one of the things I encourage you to do is to come up with an inventory management system. And there are so many great tools that you can use nowadays, whether you've got an online business or an offline business, but really manage your inventory and make sure that your employees understand that, ordering more regularly it makes more sense than ordering in large amounts, because this could have an impact on your cash flow. So make sure you create a system. It could be an online system, an offline system. It could be linked to your accounting software, but make sure you do that. Another thing I encourage you to do is to check your stock turns. You know, go to your accountant. They can quite easily, based on your balance sheet, tell you exactly how many stock turns you are having in your business. And typically, you would want to look at your industry average. The faster your stock turns are, the better it is for your cash flow. And I remember when I was retail, we used to try and get the average for our industry with 12 stock turns a year. So let's use an example. Let's say I do, let's say $120,000 a year of revenue. On average, if I want 12 stock turns, I need to have an average inventory of $10,000. So that was my average on a month-to-month basis. Look, sometimes it would go a little bit higher, and sometimes it would go a little bit lower, but on average, I wanted to get 12 stock turns a year. And for me, this was really key, that I needed to monitor that. So if you haven't done this before, sit down with the accountant and try and work out exactly how many stock turns you have every year. And more importantly, is this too high? Is this too low? Is it average for your industry? And this is really going to make you a better business owner, because I'm sure you've heard this term before. What you measure, you can manage, and stock turns is something you can do. The other thing is your product mix. You know, as a business owner, you want to get your ideal product mix. And I was discussing it this week. I was running a seminar this week, and I was saying to business owners, this is quite a common trend now globally, where your supermarkets are often becoming smaller stores. And what they're trying to do is they're trying to reduce their footprint, firstly, but also trying to get the perfect product mix, because they do not want to have too much space. They do not want to have too much inventory. They do not want to have too many employees. And this is a key issue for business owners, is that you've really got to control your product mix so that you have the right products when your customers come into your store, which is really a key thing. Is when I buy from you, I want to know sure that you've got the products and services that I need. So maybe monitor your product mix. Go into your accounting system or go into your point of sale system and see, are these products that you have on your shelves selling? And this is something you should be measuring on a regular basis, so that you really get that. And obviously this is for retail type business. But for those of us that are not retail business, something you've got to be very, very careful of is sometimes simple things like the paper you use for your printer or for your copy machine or whatever it is. Your employees will often order too much because it makes it so much easier. Just be very, very careful. So educate them. Educate them on the importance of not keeping too much inventory, and educate them on the importance of not spending too much money on items that do not generate revenue, so which is really a key thing. So let's go on to the next point, which is really understanding what we have to do to make sure that our business is operating in a profitable way. What's going on with this technology now? It doesn't want to move forward. Anyway, let me just see if I can do something here. So you've got to make sure that you as a business owner are very, very clear on these things, because it's going to make a big difference to your it's going to make a really big difference to your business if you let me just try and see what's going on here. Let me just unclog that. Anyway, I'm just trying to see, this technology is giving me a problem, which is something I was concerned about, and now it is doing it. Anyway, let me just sorry, I'm just trying to fix up this oh, there it is. That's what I did wrong. Okay, that's not what I did wrong. Sorry, I'm trying to fix up this thing so that this slides me forward. Let me just check what's going on here. Okay, sorry, I don't know what I did there, but I got the slide stuck. Anyway, so let's keep going. The key thing here is you must have a very clear understanding of your numbers. This is really, really key. As a business owner, you want to make sure that you've got your numbers very, very clear. So what monthly sales do you need to cover your expenses? And this is something that you've got to understand, which is really key, is you've got cash flowing in and out of your business. You need to know exactly what that is every month. And you can't leave this to somebody else. I mean, your accountant or other people working with you can help you, but the reality is this is going to be your thing. The second thing is, are you charging enough for your products or services? And I find this happens regularly with small business owners, is that we just don't charge enough. We really don't charge enough for our products or services, and this could be an issue. And how do you determine if you are charging enough for your products or services? It's really not that complicated. On a regular basis, go and do your competitor research. So find your top 3 or top 5 competitors and make sure that you check the prices they are charging. And also check your profit margins. Small business owners often don't do this regularly, but it's really key that we do this on a regular basis, is that we regularly go and check what our profit margins are. So let's get organized, because I believe if we are organized, it's going to make us far more effective. So simple things like invoicing immediately. I can't tell you how many times I do business with small business owners and they take a week or 2 to invoice me. And I'm thinking, the longer you take to invoice me, the longer I'm going to take to pay you. So just be very, very careful of this. Get into a habit. As soon as somebody supplies you a product or service, make sure you invoice them immediately. So that is really key. The second thing is regularly call to collect your money. This is your money. You sold this product or service. You want to collect your money. Because one of the most frustrating things, I really believe this, one of the most frustrating things for business owners is when we sell something and we don't get paid for it. That feeling you get in your gut, you put your effort into this and you're not getting your money for that work. And this is why you've got to be very, very careful of that. And I believe the longer somebody takes to pay you, the more chance that they will not pay you. So you've got to be very, very careful of this. You do not want to leave things too long. So make sure you do this regularly. Maybe every Friday, contact your customers. So regularly collect your call for your money. The other one is, offer incentives for early prepayments. Give your clients a 1% or a 2% or 2.5% discount, but make sure you take that into your prices. Just be very, very careful of giving me a discount and not, putting it in your costing when you come up with a quote for me. So offer your customers incentives. The fourth point here, I think, is very, very important. I encourage you to think about this. If there are customers that you are selling to that are not paying you or not respecting you, could be another thing, and you know who those customers are, maybe a good decision is fire them. Make a decision, and I'm sure every single one of you on this call has done this. And if you haven't, it's a wonderful thing. It really is a wonderful thing. Is that every now and then you make that corporate decision, I'm going to fire a customer, and you do that. And I encourage you to do this. Obviously not every customer can go out of business, but every now and then if a customer is not paying on time, if a customer is not respecting your employees or whatever it is, it makes sense to fire them. And really think about this, that you need to maybe do that. The other one is tighten your credit requirements. I see this all the time. I was dealing with a guy yesterday. I have a property. I sent him to go and check out my property. He said, no problem, I'll check it out and I'll invoice you. I was thinking, this guy doesn't even know who I am. Didn't ask me my name, didn't ask me my phone number, didn't ask me my details. But a typical small business owner trusts everybody. Just be very, very careful of trusting people. If you buy from any big company, you will see they will do a credit check on you straight away. They'll make you fill in forms. They'll make you do all these type of things. And you and I maybe should be doing the same thing. We should be on a regular basis making sure that when we sell something, we ask for information. We make sure that people fill in a form so that if we have to follow up, we've got that information. It's really simple things that you and I do that make a big difference. The other one is And I encourage you to do this. I did this recently. And that's one of the reasons we're using this new technology actually for our webinars. Is for many years, probably 8 years now, I've been using WebEx technology, and I communicated with them and I said, you know what, is there an opportunity to give us a better price? And it was always an issue. And then I decided, which is quite a big decision for somebody like me, especially as you get older, I find that you don't want to be changing technology. But recently we changed our webinar technology, and also we changed our email technology. So some of you are receiving new emails from us. And the reason is we found a much better deal. It was costing us $200 a month for our email. Now it's costing us $40 a month. I mean, that's a massive difference for a small business owner. Webinar technology was costing us $500 a month. Now it costs us $100 a month. You know, you've got to understand that in small business, this can make a big difference. But this is something you've got to be very, very careful of. Is if you're going to review every single expense in your business, do not focus only on price. Focus on value. And this is a key thing. You're just going to be very, very careful of only focusing on price. So I encourage you, if you haven't done this recently, is go through every single one of your expenses and make sure that you have analyzed every one and seen that you're getting a fair deal. The other one is, you know, raise the prices of your products or services. You know, every now and then, I will speak to business owners, and this is what they'll say to me. They'll say to me, Andrew, if I raise my prices, I will lose some customers. And I agree with that. I agree with that 100%. Is that if you raise your prices, you will probably lose some customers. But the lesson I've learned as a business owner is that you may lose some customers, but you'll make more profit. And this is something we mustn't forget, is that we're in business to make profit. And this is really something that we need to think about all the time, is we're in business to make profit, and that is ultimately the goal. The goal is to make profit in your business. So just be very, very careful of not focusing on that. So you may be afraid to increase your prices, but that may be your own option. So think about this. Maybe sit down with your accountant, discuss increasing the charges for your labor or the charges for your products, and just do it. And it's a wonderful thing when you build a profitable business. And for some of you, this could be the solution. The other one is you could improve your cash flow by doing a couple of really simple things. And I see this regularly with small business owners that I don't understand this. Why would they not? If you are working on a project, why would you not ask for some money up front? So get into a habit, you know, especially if you're going to be working on a project over a period of time, say to a customer, you know, this is how we operate. We'll invoice you, you give us a deposit, and then we'll start on the project. Or maybe take partial payment. Maybe split the payments, a third when we do this, another third when we do that, or whatever it is. But think of these things, because you've got to understand that your job is not to finance the purchases of your customers. But if you are accepting money only when the job is done, that is exactly what you're doing. That is exactly what you're doing. You're financing your customers' purchases. So ask customers to make deposit payments. Do credit checks. I can't tell you how many times I've gone to buy something from a big company, even a small amount of stuff, and they charge me. I mean, they ask me to if they can do a credit check. That has never ever happened to me when dealing with a small business. Never once has that happened. So just be very, very careful. Is that sometimes because we don't do what needs to be done, these are some of the challenges we go through. Because we don't do the right thing, then we have challenges afterwards. So do credit checks if that's going to make it more effective, especially if you're in an industry where people don't pay well. The third thing is go after more cash business. Learn this, you know, do business with customers that want to pay you up front. And I learned a very, very important lesson. One of the businesses I owned years ago was a business that supplied restaurants. And restaurants are notoriously known for paying things late. So what I did was I started this business and we only offered our clients 7 days, even though the industry norm was 30 days. And I remember a supplier saying to me, somebody that worked in the industry for a long time, he said to me, Andrew, if you do not offer customers 30 days, you will not survive. I said to him, if I offer my customers 30 days to pay my invoices, I will not survive. And it was really, really interesting because that was one of the most successful businesses I owned. But what we focused on was not the terms we could give you. We focused on our service. And I believe that in 2017, customers will still pay for service. And you've got to understand this is one of the competitive edges we have as small business owners, is that we can offer service. So go for more cash business. Get into a habit of asking for your money up front. Another one that is really, really key for me that I really don't understand that small business owners don't focus on is making sure that you accept credit cards. I can't tell you how many times, and this really, really frustrates me, when I go into a small business and they do not accept credit cards, or they have a sign, cash only. You've got to be very, very careful of this. In 2017, I believe that the majority of your customers have got a credit card, the majority of your customers. And that's what they want to pay with. And if that's the case, you've got to make sure that you offer them that. You just have no option. You can't not offer your customers terms in 2017. So just be aware of this. The other thing you can do is maybe have a sale. On a regular basis, have a sale so you can generate more cash flow. Just be very, very careful of this, because this could have a major impact on your profitability or liquidate assets. Again, for me, these are not great solutions. They're really not great solutions, and it's things that I would probably not encourage you to do if you don't know what you're doing. So just be very, very careful of that. As a business owner, you want to make sure that that you're making a good decision when you are doing that. Okay, so just be careful. Just be very, very careful of, for example, having sales and not looking at the impact it has on your business. So let's look at some of the ways that we can reduce our cash outflow. Again, the idea here is to get that cash flowing through your business. So that's really what you want to be doing, is to get that cash flowing. So one of the things you can do is, for example, extend your payment terms. Some of us were brought up like this, and some of you online will be able to relate to this, is you were brought up in a household that as soon as the bill arrived, you would pay it. In business, that absolutely makes no sense. No sense at all. Make sure that you pay bills only when they are due. So if a bill's due tomorrow, pay it today. If a bill's due in 2 weeks, do not pay it today. Wait till 2 weeks' time. And this is something that is really, really key. This is something that's really key that you need to address. So maybe go to your suppliers and ask them for 30 days or ask them for 60 days. It's amazing how much cash flow this helps you generate in your business. The other one is, again, like we mentioned earlier on, is ask your suppliers to re-quote you. Maybe you go and speak to that insurance guy. Maybe you go and speak to that person that does your deliveries. Maybe you go and speak to that stationery supplier and ask them to re-quote you. And again, these are some things that we can do on a regular basis, because with technology nowadays, often people can offer you a better deal. And that's one of the big advantages of technology. It often reduces the price we pay. The other one is seek out new suppliers. Don't be afraid on a regular basis to contact new suppliers in your industry and maybe build a relationship with them. So these are some of the things you can do. The other thing that business owners don't always think about is renegotiating your rent. Is go and speak to your landlord and tell him exactly what's going on, or tell her what's going on, and see if you can renegotiate your rent. My rule is that as a landlord, I would rather have a good tenant that pays me regularly than a new tenant. And these are some of the things that you need to understand, that you can negotiate your rent and examine every business expense. Again, simple things, but very, very effective. The other thing you've got to be very careful of is tying up your cash flow in assets. Just be very, very careful of this. Maybe an option for you is to lease your assets instead of buying them. And this is something could have a major issue for you, because if you're tying up all your cash in assets, you may be getting a good deal for your assets, but it may be tying up too much cash, especially in the startup stage of a business where the banks won't lend you money. So just be aware of this. So lease assets instead of buying. The other thing you can do is buy used items. You know, gently used items are a great idea. I know in both my businesses, especially the last one, the previous one, is I did this. You know, I bought tables that somebody had previously used. I bought chairs. I bought equipment for my training rooms for that. And it was a great decision because it saved me a lot of money. So don't be afraid to do that. Again, you want to just be very careful. You don't want to be buying other people's garbage. But again, it's a really important thing that could save you a lot of money. Don't buy. This is a really important slide. A really important point on the slide. This is my rule. In the first 3 to 5 years, do not buy assets that do not increase your revenue. And I think this is a very important lesson. You do not want to buy any assets that do not increase your revenue. Because it's beautiful having a lovely office. It's beautiful having a beautiful desk. It's really nice having all these things. But if they don't make your money, why would you do this? The other thing that is so simple but so important is make sure that you use online banking. And I'm sure every single one of you online do this. But if you don't, it's crazy that you're not doing this, that you're not setting up alerts on your bank statement so that every single time you spend money, it sends you an alert. I'll give you a very good example of what happened to me. What happened was somebody had stolen my credit card. I'd gone onto an online site. Somebody had stolen my credit card information and paid for a flight in Europe. Anyway, so I used to have a habit of checking my bank statements at the end of every month. Checked my bank statement, saw this item and thought, this is weird. Where did this come from? I contacted my bank, and this wasn't an issue. You got to understand, the bank was really, really quick. The only problem was that this $5,000 amount was taken out of my account for a period of time. And for small business, you cannot afford this. So I encourage all of you, if you haven't done it already, go to your online banking and make sure that you address that. Make sure that you address that. Really, it's key that you address that. That you put alerts on your bank statement so it regularly tells you so much was spent on your credit card or so much was spent on your bank statement. Really, really key things. A really simple thing, but very, very effective, especially nowadays where people are stealing credit cards so regularly. This is a big, big issue. So make sure you address this. Little things, but very important things. The other thing I encourage you to do, which is really key, is develop a cash flow forecast. I think this is so, so important. If you learn just one thing from me, is go out there, create a cash flow forecast every year. So every year, make sure that you create a cash flow forecast, showing the money flowing into your business and flowing out of your business on a regular basis. It's really, really key that you do this and update it regularly. So I've used this in my business over the last 20 years, and I found that it's been absolutely brilliant. Really, it has been absolutely brilliant. It's been the best thing that ever happened to my business, was really understanding how much money is going to flow into my business and how much is going to flow out of my business on a regular basis. And you've got to understand the value of this. It is really, really key. It is really, really key that you understand this, that you address this and you understand this. So when you do a cash flow forecast, there are a couple of things you need. Firstly, is you need to make sure when you do a cash flow forecast that you're conservative and realistic. And what I find with business owners is that often we exaggerate our sales and underestimate our expenses. I want you to do the rest. The opposite, sorry. I want you to do the opposite. I want you to underestimate your sales and overestimate your expenses. That's what I encourage you to do. The second thing is, especially if you're an existing business, is use your previous year's numbers. So take your cash flow forecast from last year and enter it into this year. And if you don't have those numbers, just get your bank statement. Take your bank statement, enter it into a spreadsheet, and then project forward. It's really easy to do, but very, very important that you do this. So be conservative, realistic, use previous year's numbers as a guide, and take seasonal fluctuations into consideration, which is really key. The other thing you want to do is you want to make sure that you look at your sales. You look at your sales and determine what portion of your sales are going to be for cash and what portion of your sales are going to be 30 days. So one of the questions being asked here is, what's the difference between a cash flow forecast and an annual budget? They're exactly the same thing. Okay, so they're exactly the same thing. You can call it a budget, and I really don't mind. So what percentage of your sales will make up your cost of sales? So you need to know that. So for example, if I'm doing $100,000 of sales and my profit margin is 40%, my cost of sales is going to be 60%, which is really, really key. Okay, so understand the importance of that. And always use, if you've got historical numbers, you can use that. Or if you're a brand new business, which is hopefully some of you are a brand new business and you're thinking about starting your own business, then you would look at industry averages. You can go online and you can get industry averages, speak to your accountant, they can help you, and this can really be beneficial to you. So keep that in mind. There are a couple of options. The third thing you need is your operating expenses. Again, you need to know what is your rent, what is your telephone, all of these things on a monthly basis. Again, you can get this from your accounting system. If you're a brand new business, you've got to make sure that you estimate what they're going to be, because you want to make sure that this business idea of yours is a sustainable one. And this is really key. So when you calculate your expenses, don't be conservative or don't be too conservative, and always add a contingency, a just in case. I would encourage you to do. And then the other thing you want to do is, if you're going to be purchasing any assets, you need to know what those assets are, how much are they going to cost, and you need to include those in your cash flow forecast. So it's really about inflows. It's about knowing what your cost of sales are. It's about knowing what your operating expenses are. And if you have this information, it's going to make you a much better business owner, and it's going to make it much easier also for you to do a cash flow forecast. So what I'm going to try to do now is we're going to do an exercise, and I'm going to show you how I would do a cash flow forecast. So here's a simple example of a cash flow forecast. Let's say I'm opening a smoothie business. These are my sales forecasts. I expect to do 200 smoothies, and this is exactly what you would go through. But let's say you were a service business. If you were a service business, you could do exactly the same. But let's just go through this example. This is a smoothie business. This guy expects to sell 200 smoothies at $4.25. He's going to sell fruit salads, 30 of them at $7.50. He's going to sell these things at $5 each. So that's his sales forecast. Okay? So this, let's say that this business is all for cash sales. So he'll put that amount in, and this will work out his cash sales for each month. And I'm going to use another example now for any of you that are in different businesses. So there's an example of your cash inflow. So this section here is your cash flow forecast. So if you're trying to work out which is the actual cash flow forecast, it's this part over here. That's the cash inflow. That's the cash outflow. This is your sales forecast part of your cash flow forecast. And this is the way I do mine every year, is exactly like this. I go through all my numbers. I put in all my cash outflows. I start off with my opening bank balance. Let's say I had an opening bank balance of $7,452. This will tell me my closing bank balance for every month over the next 12 months. So this is a very interesting example, because this business, its cash outflow is much higher than its cash inflow. which is a problem. You've got to understand this is a problem for this business. So this will help this business owner work out exactly how much money it needs to borrow to ensure that it doesn't have negative cash flow. But let me show you another example for a business that does services. So a business like mine. So we do services, we do webinars, we do seminars, and let's say we were doing a cash flow forecast for me. Okay, so my webinars, I do these for large corporations, and let's say I do one a month. Okay, so I'd be doing my cash flow like this. Let me just fix this up. Let's say I do one a month. Okay, that's my projection for the next 12 months. Let's say I do some seminars, and let's say I charge $1,000 for my seminars. Let me just put in $1,000 here. Okay, and again, these are my forecasted numbers. Okay, these are my forecasted numbers. I would go through every month and say, in November, I expect to do 2. In December, I expect to do 1. In January, I'll do 3 because it's a busy time of the year. February, 2. March, maybe I'll do 1. In April, I'll do 2. Again, this will be based on actual experience, not just on guessing like I'm doing now. I'd go through all the months, and this is exactly how I would do a cash flow forecast. So I'm going to do webinars. That's one of the things I'm going to sell. I'm going to do seminars, and let's say I do content development, which is the other thing. So we do, we write blog posts and things for various clients, and let's say we charge $750 for a blog post. Let's say we write 4 a month. November, 6. Now let's do 4 in December. Let's do 8 in January, and these will all be based on what I know about the industry. So I'm not just guessing these numbers. I would make sure that I'd look at past numbers, and I would look at this history. Okay, so here's my sales forecast for my business. Is I do webinars, which you can see over there. I do seminars, which you can see over there. Okay, and I do content, which you can see over there. Okay, so these are some of the things that I'm doing. And then I would go through all the sales. So I'd go through the sales, and I would analyze the sales. I would analyze the sales and make sure that I put in the cash flow properly, because this is a really key decision. All right, so let's say my revenue is $7,500 for November, but they're not going to pay me in November. They're going to pay me the next month. So I have to put in 0 for November, and I would put in the amount for 30 days. So let's use that example. So if it's a brand new business, I get 0 cash sales, 0 sales from receivables, brand new business, okay? In month 2, I will get $7,500. That's presuming everybody pays me in 30 days. But the reality is sometimes some customers will pay you 30 days, and some customers will pay you in 60 days. So maybe I would take that into consideration. Maybe I'd take that into consideration and put in another column for 60 days. So let's put another column here for 60 days. Okay, so let's do that, 60 days. There you go. So let's say $5,000 are going to come in 30 days, and $2,500 are going to come in 60 days. Do you see what I'm doing? Is I'm looking at the sales forecast for that month, and then I'm making sure that I put it in the actual month that it comes in. So sales could be in January or November in this example, and the money comes in December or January, and that's what I would put it in. And then I put in all my expenses, my rent, my telephone, my marketing. This business wouldn't have inventory, so I wouldn't have inventory for this business. Say my bank charges, my utilities, my transport. Let's say I'm taking a salary of $3,500. Okay, I would put that in. And then let's say I'm buying equipment of $12,000. So this cash flow forecast would tell me exactly how much money I need to put in the business. So I'd go through every single month, and it'll tell me how much I need to make sure that I have a positive cash flow. So understand the value of this is, as an experienced business owner, this is a really useful document. Let me tell you what else I do, which I encourage you to do. I encourage you to do exactly the same thing. Is at the end of the month, what I do is I get my bank statements and I put exact numbers. So I'll get my bank statements and I'll say, okay, how much cash flow actually came in? And then I'll put in, say, $5,000, say $7,500, say $6,000. I'll get all this information from my bank statement. So all this information I will get from my bank statement. I will go through my bank statement, get all this information that's in my bank statement, and then I'll put the actual numbers in here. So I'll put the actual numbers in here, and this will be able to tell me exactly what my inflow and my outflow is for every month. So it's really key that you do this. It's really, really key that you do this, because this can tell you at the bottom here exactly how much money you're going to have in your bank statement. You know, so this is a key decision that you make as a business owner, is that you understand the value of this. And remember, if you want this template, you can get it. I will share it with all of you. It's a very, very simple, easy to work. If you just send me an email, I will send you this template. Okay? So just remember that. If you send me an email, let me actually put the email address on here. If you send me an email, I will send you this template. So send me an email to andrew@bizlaunch.com. It's a good idea to spell my company name right, to andrew@bizlaunch.com, and I will send you this template. Okay? But it's something, I mean, you can use this one or you can use another one. But it's really, really key that you do this. I've used this for 20 years, and it's really, really helped my business, because I know on a regular basis how much money I need to have in my bank account to cover my outflows. And if I do that, there's a very good chance I will survive. If I don't do that, you know what, it makes it very, very difficult. So I did a very simple example. What I encourage you to do is to do the same thing and do it for your business. So you do the same thing and you do it for your business. Remember, you have to email me. You have to email me if you'd like a copy of this template. So you send me an email to andrew@bizlaunch.com, and I will send you a copy of this template. So let me just summarize quickly. So that we can understand the importance of cash flow. So understand that these are the type of things you need to be doing. Make sure you know your monthly sales to cover your cash outflow. Make sure you're charging enough for your products or services. Do a competitive price check. Make sure that you invoice immediately. This is really, really key, that you invoice immediately. That you regularly contact your customers. So you do collections on a regular basis. Contact your customers and make sure that they pay you. Make sure that you fire bad customers and just make cash flow your problem. I believe that if you make cash flow your problem, you are going to be a far more successful business owner. So this is my advice to you. Make sure that you monitor your cash flow on a regular basis. Develop a cash flow forecast or a budget, whatever you want to call it, for the next 12 months. And on a regular basis, look at your bank statement so you know exactly what you were doing. And really make cash flow your problem. Why? It is your problem. If we know that 80% of small business owners fail because of cash flow, we've got to monitor this. And I promise you, if you manage your cash flow and you control your cash in your business, it's going to create less stress in your life. And that is what I wish for every single one of you, that you use this information and you build a very successful business. That is my wish for all of you. And one of the best ways of doing it is by managing your cash flow.